But that's where we stand with the 10-year at 145 to end out the week for closing bell. Have a great weekend. Fast Money starts now.
Live from the NASDAQ market site overlooking New York City's Times Square, this is Fast Money. I'm Melissa Lee. Tonight's trader lineup, Tim Seymour, Nadine Terman, Brian Kelly, and Pete Najarian, co-founder of MarketRebellion.com. Tonight on Fast, a crypto crackdown. Bitcoin plunges as China bans all cryptocurrency transactions. We'll tell you why our own Bitcoin baller, BK, is calling this great news. Plus, a turning point for treasuries. The chart master is breaking down the rate rally where he sees yields headed next. And later, how this week's epic drop for one commodity could have one of our traders going nuclear. But we start off with a big buzzkill on Nike. Shares getting rocked after the company got guidance on supply chain concerns. Now, all of you loyal Fast Money fans out there, and there are many, you know that we tackled Nike on last night's show. We were on the company's earnings call. We broke in the moment Nike announced the guidance cut. At the same time, shares were down only 3% in light volume after hours. But today, Nike dropped like a rock, falling 6% for its worst day since June of last year. So given today's market reaction, has this changed the story on Nike? I'll go to the shareholder. Tim Seymour, what do you say?
And the shareholder was one of the more bullish ones. At least my glass was half full last night. And what do I do today? I hate where the stock is on the chart, but that's not really how I invest. I use technicals as a guidepost, but they're not driving me in or out of positions, at least not in the case of Nike. And in the case of Nike, the question is they lowered to mid-single digits, MSD. Is that enough is the question that the street asked today. And I think in terms of a couple downgrades in terms of 22 earnings, I think that's the story. 23 seems to be a story everyone's willing to give them a benefit of the doubt on a growing TAM, addressable market, a growing fitness craze, their ability to grow gross margins. Remember, outside of shipping costs and some other headwinds, which were substantial, Nike grew their gross margin, and they grew it by about 170 basis points, and somewhat better than expected. So you have a dynamic here where I think their core business, the demand side of the story, we all know is very solid. We know this is supply, and suddenly CEO Donahue sounds a little bit like the Fed. The word transitory, I believe, was used, and that's the question. How transitory? Because right now we're 10 weeks of production and counting in Vietnam, and there's a question on how quickly, even if it all ended tomorrow, they could ramp back up. And so as a Nike shareholder, disappointed, concerned, but not shaken, and not shaken for what I think is one of the great consumer products brands out there.
Standing by Nike, it sounds like. Just to put a fine point under this, this is a loss of 10 weeks of production because of the factories that are already closed, whether it be 50% of the apparel factories or 80% of the footwear companies' factories. Nadine, what do you say about Nike today? Is it worth 40 times next year's earnings at this point when there is a question mark about next year's earnings?
Mel, I think that Tim made a really good point about being a long-term shareholder. So if your investment horizon is very short-term, you're looking at the technicals, and my technicals are saying, I wouldn't trade this right now. A lot of things have broken down. But if you're an intermediate to long-term holder, as Tim pointed out, really strong demand. This isn't a problem with management. There's some just transitory can be for a while, though. I think that's your point, Mel. But it's going to take some time before you're going to see the flow through of the demand to the bottom line. So when we were talking to some clients of ours who manufacture in Asia yesterday, it's going to be too late right now for the holiday season to find those shipping containers, even if you can produce the product. And so you're really looking at 2022 in terms of calendar year to be looking at this stock. So again, it depends on your duration.
This is what BTIG said about Nike, Brian Kelly. We fear this issue is just too large to control, even for the best-run athletic brand in the world. Even Nike doesn't have a grip on this problem. It's out of their control. So what do you do here? Because the message is that for a lesser-run company of any sort that manufactures goods in Asia, it's going to be terrible.
Exactly. I think that's the takeaway here. And this, to me, is the biggest threat to the equity market in general. Is it's not a demand problem. It's a supply issue. And so it doesn't matter what your earnings projections are. Doesn't matter how much you think you can sell. If you can't get it, that doesn't matter. And this also kind of shows how complicated the Federal Reserve's task is here, because you have people that are willing to buy things, and that's creating this kind of inflationary push. But if you slow the economy down, then somebody like a Nike or any of these high multiple stocks are going to have a real problem. So, I'm not a buyer of Nike here. I think if I had to sum it up, I agree with both Tim and Nadine. The TLDR on this, which is too long, didn't read for those boomers out there, Christmas is canceled.
Christmas is now. Who is the Grinch here tonight, Brian Kelly? Pete Najarian, you didn't like the valuation going into the quarter. What do you think of the valuation now? 6% down.
Still too high. Still too high. It's way too high, Mel. I think the problem is this. It's okay to have a higher PE level if everything is working and everything is going great. But there comes that point in time, it happens to every company, where there is that stumble. And now the stumble is a combination of a lot of things, but obviously supply chain being the biggest. I think there are other issues as well. There's a lot of pushback in China for Nike products now. If you look at what their rate of growth was, it's nothing near what it once was. And so that, I think, would be somewhat concerning. North America is still pretty solid, but not growing at the same pace either. So I think there's a lot of things that I think you have to factor in here when you're looking at Nike. And then when you're looking at a company that's still trading, as you mentioned, at a forward somewhere close to 40, I think when you look at the historical, Mel, and you go back and you look at mostly has been somewhere, call it between 22 and maybe 28. That's been the historic PE. So the fact that it's trading at a 40 now, I understand it. It's got digital. That's been one of the things that's been absolutely phenomenal for them. It's been a great growth area, but that still doesn't give me a reason to say, you know what? Yeah, it's dropped off whatever, 6% today. Has that brought me back into it? Absolutely not.
All right, let's switch gears now. Rates in rally mode this week. The 10-year yield jumping to 1.45. And if you've been following the chart master, that is the magic number he's been calling for. So where do we head from here? Let's get straight to the chart master, Cornerstone Macro's Carter Worth, to break it all down. Carter.
Well, when someone says, where are we headed from here, which you said, my first thought is, I have no idea. Of course, so we're all in the dark to some extent, but let's try to figure it out together. I've got 4 identical charts and then 1 long-term chart. So the first chart you're looking at is just a 1-year chart of yields. And what's important is this. We know where we peaked, 177 on the 30th of March, and we know where we bottomed on the 20th of July at 1.12. 145, the reason that's been cited for months is that that's the midpoint. It's not only the midpoint, you can see in that first chart, it's exactly to the penny where the downtrend line, in effect since the peak, comes into play. Now look at the second chart, same time frame, but I've included the 150-day moving average, something I rely on heavily. Where is 1.45? To the penny at the 150-day. Third chart, it's charts 1 and 2 combined. So we have both the downtrend line and the 150-day moving average right where we are now, an inherently difficult level, a big move to a difficult level. Fourth chart, same time frame again, 1 year. And now I've drawn the opposite or opposing line. You have 2 converging lines here. Consensus is increasingly that we break out to the upside. My hunch is that we're not in a position to do that right here and now. Final chart, it shows the wedge in more sort of not detail, but more importance, how long term. This is the line that's been in effect for 3 years. I think having approached it quite quickly, rates back off at this point.
So buy treasuries, Carter?
You got it.
All right. Carter, we'll see you in options action. Carter Braxton Worth. Would you agree with that take, Tim? Because that implies that we're sort of churning. We're going to hit this level and then we go back down.
First of all, no one uses the term to the penny more emphatically and more convincingly than Carter. And I bet he used that same phrase at 111 on the 10-year on the downside in mid-July. I mean, Carter's made great calls on these turns. Hard for me to argue with Carter. But the question is the trend at some point ready to break? And we are at the up end of a downward trend line. I just think we're in a case here where inflation is going to be something we cannot fight. Rising interest rates of this week are a combination of the Fed and feed through. Listen to FedEx, listen to Costco, listen to everybody. And I think rates are moving higher. And I think it's very good for cyclical, industrial, bank, and even value-oriented equities, which had underperformed for months. So, again, my Treasury call is, like Carter, I'm not going to tell you exactly where we end up, but to me, the move is ultimately higher, even if we are oversold to the upside on yields, and you could see a bounce in Treasuries here. I would not be staying around for that much longer.
Okay, Brian, where do you stand on Treasuries, and what do you think the chart tells us about the economy? if anything?
Yeah, so that's the $1 trillion question. I mean, it's hard to read too much into the bond market because it's so manipulated by the Federal Reserve. And I don't mean that as a slight. It's just the fact that they're buying bonds, right? So for me, I am short 10-year notes, right? So I think yields are going higher. I think we're going to get that breakout, primarily because the Fed just told you, hey, by the way, we are going to stop buying bonds in a little bit. There is some tailwind from buyers overseas, but that could easily reverse if you get any type of inflation scare, which I think we're getting once again. We've probably reached kind of the peak of the deflation scare. And with the supply chain issues, things will start to ramp back up. So that's my call on it. I could be wrong. Carter has been 100% right. I'm just hoping this one time maybe he's wrong.
Yeah. How are you trading treasuries, Nadine, if you are?
We have been. We've been pretty much trading the chop. And I think that's where I agree with Carter, is that on a very short term, we've been just trading them. They've been in certain bands for us. But I also now agree with Brian in that looking forward, if you're going to look for the next few months, we think that rates are rising. So we would be more inclined to be looking at high yields, LQD in terms of, an ETF also that's non-high yield that we're interested in. But you could also play it in financials. You could play it in energy. So what this is all saying is if you think inflation's here for a while, and if you think the growth of GDP is accelerating, yields are probably going up. So you'll want to play it a different way than buying treasuries. But for a trade, Carter may be right.
Do you think yields are going higher based on higher economic output or accelerating growth, Pete? I mean, given what we heard from Nike and FedEx over the past couple of days, how are you feeling?
Well, it does make you wonder, Mel. I mean, we're talking about two major companies, massive companies, and giving us some lines, one about supply chains, the other about workers. I mean, it really does say a lot about what's going on. So I look at it this way, Mel. I think the 10 years is going to likely continue that churn that it's been in. But I think that the real meaningful thing will be the velocity of the move. I think it eventually goes higher towards the end of the year. As a matter of fact, I continue to see in the ETFs, I see the XLF with a lot of paper, all very, very bullish, looking to the upside and going out all the way to December. So when I see stuff like that, I think that the longer range tells me 10 years going higher. How fast it goes, I think that's the very meaningful thing. It's the velocity of that move. If it continues on this churning process, that's going to be very, very helpful for a lot of people. Other people, if it gets that velocity and starts shooting to the upside, we're going to see a lot more volatility come back into the market as well.
And that's the thing. We've seen the moves happen real fast when they do happen. I mean, even in just the past couple of days, Tim. I mean, what was the move in the 10-year? Was it 15 bips or something like that? I mean, that's kind of unheard of in the course of a short amount of time.
I don't know. I really don't think it is, and I really don't think it is from the levels that we're at. And I realize on percentage basis, yes, Guy talks about this all the time. I mean, look, the farther out on the curve you move, the more duration you have, and I don't want to bore people to death, but there's a much more significant move in terms of basis points. You have a lot more volatility. Seeing the move of 25 basis points off those lows, in the last week or so, I don't think is shocking given the inflation reads we've had and a Fed that signaled November is game on. By the way, two other major central banks, Norway, Bank of England. Norway hiked this week. Bank of England signaled that they could be hiking in the first quarter. These are all reasons why rates could be moving higher. I don't think that the velocity, as Pete talks about and is watching, is something I'm worried about right now, the way they have moved relative to where we have come from.
Okay. Coming up, the China crypto crackdown. Bitcoin plunging as Beijing takes aim, but our resident Bitcoin baller, BK, says this is great news. He'll explain why. And later, our chart of the week, a major meltdown for this commodity, what it is, and how our traders are playing it. Stay with us. Fast Money's back right after this.